It's all about diversification on today's show. We spoke about investing in international equities, and now I'd like to talk about investing in gold and silver. I'm adding silver into that conversation as well. Navneet Damani, Group Senior Vice President and Head of Commodities Research at Motilal Oswal Financial Services, joining me now. Navneet, thanks so much for taking the time. Let me start by asking about that gap between silver and gold. It's closing because silver has played catch up, and a lot of people who managed to catch the bus early are benefiting.
Well, hi, and the last time I was on the show, the gap was around 100, 102. The gold-silver ratio was getting around those levels. And ever since that, we've seen the ratio skewed by about 20%. And now, as we speak, it's about 82, which was about 102 about 3 months back. So a massive catch-up rally has been witnessed in silver prices along with gold. What predominantly has happened is silver had been a laggard as far as the price trend was concerned since the start of the year, but the last 2 months have been very interesting, where about $36 where it was trading has now become $39.50 and has inching higher every day by heading.
Okay, so what do you think is the strategy on gold right now, Navneet? Because it took a bit of a pause. It ratcheted up very fast, and because of that drop that the dollar had, you saw interest and you saw an increase in gold, or directionally you expected to see a further increase in gold. Is that the right thesis right now? Would you continue to buy gold even at these levels?
Well, let us take two steps back and understand that what has happened in gold. So over the last 2-3 years, we've seen massive central bank buying getting accumulated into gold prices, 21, 22, 23. All through these years, we've had every successive month of central bank buying anywhere between 50 tons to about 70, 80 tons. But that has now reduced to about 5 to 7 tons per month. So that is a very significant drop that we've seen in the last few months because the prices have become very higher. We've had 3 ongoing wars and couple of wars already settled, which typically indicate that massive geopolitical stress was already in the price, which led the prices to move from $2,700-$2,800 to about $3,500. But some of it is already built in the price, and some of it will continue to have an overhang time and again on the prices over the next few weeks and months as well. Along with that, the US has struggled with massive inflationary concerns. Inflation is now within their control at about 2.5%. But interest rates have not been brought to the fashion or the trend that they would have appreciated. They are having a huge deficit budget bubble, and which is kind of an overhang in their framework, and it is due about in the next 60 days. About $9 trillion worth of debt is due for servicing, which kind of has been already factored into prices. So all in all, I believe major positive factors are kind of discounted in the prices, and the market will need some major fresh triggers from here to move on to significantly higher. In the last 40 years history, there has been not a single year where market has moved beyond 30% in one single year and closed there. We are already at 30% year to date, and I don't see any significant rally or maybe a kind of breakout from these levels. Yeah. Maybe we can take a pause around these levels, we can consolidate around these levels, but any incremental upside would require some massive trigger, which we are not able to envisage at this point in time.
You know, sports fans and market participants will know not to count out the completely unexpected happening, but with that context, and of course, this could be that 1 year that moves beyond 30%, who knows, but the chances are not very high. Point well taken, Navneet. So therefore, you're suggesting you hold your horses. You don't deploy a whole hog into gold, but is that the same argument for silver? Do you think that more of a catch-up is on the cards?
Well, a lot of people are living in FOMO at this point in time as far as gold is concerned, and time and again we are receiving massive queries, and people on other channels also posting very significant queries about buying gold at these levels. But I'm a little concerned for retail investor, because something like gold, which has already rallied by 120% in the last 4.5 years, significant upside from here on will be little questionable. There could be about 5-7% upside. I cannot rule that out, but I think you kind of missed out on the cream, and now what you're trading for is the froth, which can or which cannot evaporate. I don't know. So I would rather hold my horses at this point in time, whether investing is gold in concern. If you are sitting on significant profits, some bit of profit taking also can be done. Well, as silver is concerned, you've seen significant catch up in the fag end of 2024 and now in 2025 also. For the last couple of months, we are seeing a catch up in silver. This rally could extend towards 42, 42 and a half dollars, or typically another 5-7% from here on also. So I wouldn't be surprised to see silver on the domestic front anywhere closer to 125, 130, $130,000 by the end of the year.
Okay, 1,35,000 by the end of the year. And do you have any levels in mind for gold? You've said that you anticipate a bit of a pause, and so therefore, am I right in assuming that end of the year target would also be more or less where it is right now?
Well, I would wish that it is a little lower than where we are today, maybe around 3,200 or lower is where we would be more than happy to advise that investors once again to start looking out for gold as an investment. But at 3,400 or $3,450 what we are trading today, maybe a $50 upside could be in store. We would again kiss the magical number of 3,500 and then probably start to correct or consolidate. We'll have to see there. But if I have to put my money, I would rather bet on silver from a 6 to 12 month perspective.
Yeah, you know, Navneet, if we were wishing, then I would wish that during the festive season it should fall dramatically. A lot of people go out and buy the gold that they have to, and then it rises again. So if wishes were horses, then everybody would have one. Thanks so much for joining me today. Always a pleasure speaking with you.
Absolutely. Thank you.
All right, let us know what you think. Are you going to hold your horses? I know I've stretched that analogy quite a bit, but what do you think about gold and investing in silver? Let us know in the comment section. And what do you think about the investing in international equity as well? Let us know in the comments and tell us what you'd like to discuss or what you'd like us to discuss on this particular program. It's been an absolute pleasure bringing it to you. Do stay tuned. Lots more coming up on NDTV Profit.